Volatility is back in the markets, and I'm here to discuss all of this with you in the week ahead video. Thanks for being here. My name is Blake Morrow with Forex Analytics. Yeah, we're going to talk about Trump, tariff risks, tariff threats, and how this market's kind of processed the information this week. We have 4 central banks that are meeting this week. We got the Fed, the ECB, the Bank of Canada, and the South African Reserve Bank, the ZAR. And then also, we have a lot of earnings. A lot of the Mag 7 companies are going to be reporting earnings this next week. And I'm here to break it all down with you. So I'm glad that you guys and gals are all here. So let's talk about, first of all, Donald Trump's inauguration and how it's created a lot of volatility. When he came out of the gate and he said, hey, we're gonna do tariffs across the board on day one, and he did not deliver that, and instead said, hey, we're gonna wait till February 1st. That gave the market the incentive to rally for stocks because everybody wiped their brow and said, okay, well, that's good. The dollar started to sell off a little bit, but every evening in the U.S. here, every evening we got threats, whether it was Canada and Mexico are going to receive tariffs on February 1st, then the EU, then China, and then just last night. So this is over the span of just a few days. Then last night, he said, President Trump said he had a conversation with President Xi, and he'd rather not impose tariffs on China if he doesn't have to. And that allowed for further dollar weakness. So if I can show you guys the volatility that we've seen in the markets, it's been pretty darn wild. And let's go over to some live charts here in the euro. And you can see this massive amounts of volatility that we're seeing. And it's good. I mean, if you guys are currency traders, currency traders or traders in general, it's creating a lot of volatility. You can see the push up that we see in the euro, then the sell off, then the push up, then the sell off, then the push up and the sell off. That's all created from the inconsistent message that we're getting from Donald Trump and his administration. Now, we expect that over the course of the next several weeks, we're going to get a better idea and understanding of what the tariffs are going to look like and what's going to be with trade partners and who's going to get tariffs imposed and how much. But it's going to take some time. And as that evolves, this volatility is here to stay. So one of the best ways to take advantage of volatility, if you haven't figured it out, is the Trader Funding Program. If you want to learn how to access larger amounts of capital, you could take a one-step assessment. That's where you have to make 10%. You can't lose more than 6% on a high watermark basis. That means as you make money, you can't lose 6% from that high watermark. And you can't lose more than 5% in one day. If you can make 10% and not lose more than 6% over an unlimited amount of time, check out the one-step assessment, because then you can access $25,000 all the way up to $1 million account. Now, there also is, for non-US traders, there's a way that you can access immediate live accounts and immediate larger accounts for a certain fee. But there are rules that are still applied. That means you can't have more than a 5% drawdown. But as long as you can control your risk, accessing larger amounts of capital with a little bit of capital is a really great option for you. Again, this is an option that's available to you if you're a non-US based trader. So check out the Trader Funding Program. We've been doing this now for 3 years, and we've had a lot of successful people run through these programs and continue with these programs on a month by month and a year by year basis. So make sure you check it out. All right, that's the best way to take advantage of volatility. And you know what? When you do that and you're in the Trader Funding Program, you also get access to the Forex Analytics community, the platform that you see here, different types of analysis for 30 different instruments, not just currencies. You can be talking about the S&P, boons, bonds, the dollar index, Bitcoin, and you can be in our chat room where you can see, oh, hey, what is people like? What's Blake trading? Oh, Blake just got out of his euro sterling short. Wow, okay, and he's long euro dollar, Norwegian krona. You can see different positions that I'm in or other traders in our community. It's not just me. And then you can talk to myself, other analysts at Forex Analytics. You can see other charts from different traders that that have been in our community for a long period of time and what they're looking at in this A, B, C, D completion in the S&P. If you want to know all this information just before, like that happened from this morning before we actually reversed, check out Trader Funding Program, check out Forex Analytics. Okay, enough about that. I do want to continue to talk about, the Trump threat. So let's discuss this just a little bit further, because I believe that when you're talking about China and you're talking about Trump and China, and this is kind of a working theory that we've been talking about in the Forex Analytics community, when you're talking about the bond market, and you're talking about, actually, let's go over and take a look at the 10-year, and I'm going to go over to my bond market and notes market charts really quick, and actually, let's go into the ZBs. So when you're talking about bonds and what's happening here, everybody probably knows this, that the bond market has been under a lot of pressure. One of the largest holders of U.S. Treasuries is China, and we've seen this consistent selling, persistent and consistent selling of U.S. fixed income. My opinion would be that China is probably behind some of this, if not all of it, but probably a lot of it. And it's making rates go higher. That's driving the dollar higher. And my assumption is Trump and Xi are probably working out some sort of trade deal where there's going to be give and take, and maybe not so much selling some of their portfolio of fixed income, but allowing maybe even buying some more and letting less go, which will allow yields to come down and the dollar to come down, because ultimately Donald Trump and his administration, they have all said they want a weaker dollar. They want to build the U.S. manufacturing base. And one of the ways for them to do that, and where they really have to start, the starting point is having a weaker dollar. So by engineering a weaker dollar this way and having less pressure on our fixed income market, allowing them to rise and yields to come down, will ultimately help the dollar come down, and it'll help the Trump administration in their ideas of having more of a manufacturing base. So my opinion is there are a lot of things that are happening behind the scenes that you and I are not privy to, but that's why we look at price, and we can all realize that the U.S. dollar is actually indeed making a pretty darn big move lower as it breaks through a lot of key levels of support that we've been talking about. Matter of fact, we're testing the previous highs from October of 2023 right there. And if we start breaking down any further, the dollar index is probably going to continue to come under pressure, which I'm going to talk about all the things that are happening this week that could potentially assist into that happening. All right, so let's go. I'm just going to run through the calendar really quick, and I'm going to give you some of the. You can follow along here on Forex Analytics. You can grab you can grab the time frame that you want, and go through the calendar with me. But I'm going to talk through some of the things that are happening this next week that could really move the market. So starting off with Monday of next week. Well, Sunday night we're going to have Chinese manufacturing. That's one. That's going to be potentially moving the market. On Monday morning we're going to have German IFO, which one of the reasons why, if you look at the euro, one of the reasons why the euro has actually performed quite well today, and you can see that initial spike higher. That's because the European PMIs came in better than expected, and that is keeping some upside pressure on the euro right now. And with German IFO data, if it comes in a little bit more positive, because everybody's expecting the number to still continue to slide, if Germany's getting we can call it, and what I've been calling it is just a Trump bump, that because it's a global thing, it's not just U.S. Although people believe the U.S. data has improved really at the end of the year due to the Trump bump. Well, also maybe it's going to be improved in Germany, where Germany has been suffering. Anyway, that's data that we're going to be looking at on Monday. Also, ECB President Lagarde, she is speaking at the Hungarian National Bank. The time's to be determined. U.S., we have new home sales on Tuesday. Some pretty important data is coming out. We're going to have core durable goods orders. We have a 7-year note auction that's coming out. We have Conference Board consumer confidence numbers, Richmond manufacturing index. But it's really Tuesday night, and actually I want to get into a different chart here. Tuesday night, we're going to have Australian inflation data. Now, the reason why the Australian inflation data is going to be really important, and we obviously we talked about this this last week about this massive breakout above 63 cents. We've been talking about it literally for the last couple of weeks. The reason why this is so important is because the RBA is the one central bank that really hasn't started cutting rates. One of the major, central banks that haven't started cutting rates. This inflation data, if it comes in softer, it could open the door for the RBA to actually cut rates. Now, we've all seen inflation data globally has been somewhat stickier than we'd like as consumers, but also central banks would like as well. If the Australian CPI data comes in hotter than expected on Tuesday night, which is actually Wednesday morning in Australia, we could actually see the Aussie continue to rally. Now, I want to show you where we're at technically in the Australian dollar, because if you go from this high right here, right, this high right there, to the low, what you will notice is we are at the 24% retracement. We're also at the 50 DMA. So if we start breaking above the 50 DMA, we start breaking above this week's highs, that's gonna clear a lot of levels going into early next week or middle of next week, where you can see the Aussie really reach for maybe 64 cents and above. So keep your eye on the Aussie dollar going into next week. Now, continuing on with what's happening on Wednesday, Wednesday is going to be a huge day, because not only do we have the Bank of Canada, which the Bank of Canada is expected to cut rates. Now, the dollar CAD did not break out and make it to the 161% extension. I was hoping we'd make it to the 161% extension, but notice where we hit. We hit the 127% extension. Bran, inside of our community, noticed that we might be developing a megaphone pattern. All right, something to be keeping an eye on, especially if the dollar continues to weaken. And the Bank of Canada is expected to cut rates, and they have been the most aggressive central bank. Now, they've done this for a reason. As mortgages have reset in Canada, they wanted to make sure rates were coming down enough to where it didn't impact the consumer as much. However, if the Bank of Canada suggests that they're going to, maybe slow their pace of easing, which the market is not expecting, we could actually see the Canadian dollar strengthen quite aggressively, especially if we break below 142.60 or the 50 DMA that you see right there. So I want you guys to keep a really close eye on the Bank of Canada, which happens just before, the FOMC. The FOMC is also meeting on Wednesday, and that's going to be a huge potential mover. Obviously, the market is looking, and actually I'm going to go back to the dollar really quick. The dollar index. The dollar index is already starting to show some signs of weakness, and as you can see, we're below the 24% retracement, and we're actually below the 50 DMA at the time of recording. And the market is still live right now as we're going. We are below the 50 DMA, and the 38% retracement comes in around the 106.35. Now, most people believe that the Fed, even though the Fed is expected to keep rates unchanged, a lot of people believe that the Fed is just going to stay unchanged, wait for more incoming data, whether it's inflation data, labor data, before they make the next move. Some people believe the cutting cycle is completely over here in the U.S. However, we heard from the Fed's Waller, about potentially more rate cuts coming in the future. And so if the Fed knows that inflation is going to continue to drop, and the way, if you guys ever listen to my interviews with Jim Welsh, you'd understand how CPI data and inflation data works, how it peels off one month, adding another month, and CPI should continue to come down. And inflation should continue to come down. And if it does, we do see the PCE basically at the end of the week this week. But if inflation continues to come down, the Fed could have the door open to continue to cut rates, or especially if labor data continues or starts to show some signs of weakness, which it isn't right now. But we have to listen to what the Fed has to say this week. Even though they're expected to keep rates unchanged, if they leave that door open for rate cuts moving forward, we could see the dollar drop more precipitously down towards the 106.35 level. It maybe even as early as next week. Just remember, we're testing some really key levels. And guys, if you don't know how important those levels are, if you look at the bias chart that we do every single day here with the Forex Analytics community, you'll notice that we have 107.25. We've been writing down 107.30, 107.25 literally all week long. And today's low at earlier was 27. We tipped again below to 21, but you can see the dollar index is really threatening a big breakdown if we get a foothold below these levels. Also keep in mind, we are below the 50 DMA. Now moving along past the Fed, as we, I should probably mention this. I didn't mention this. On Wednesday, we have Mexican employment. By the way, you should be looking at the US dollar Mexican peso. The US dollar Mexican peso has broken below channel support. We've been talking about how important this channel was. You know, we're not too far away from the election night lows, and you can see the dollar Mexican peso is showing some signs of weakness. Also, what's happening on Wednesday is we have some earnings. And like I said, a lot of earnings are coming from the Mag 7. And Wednesday, we have Microsoft. Just pull that up real quick. We have Microsoft earnings. You can see how Microsoft is stuck here in a triangle. We have Meta. And by the way, I am bringing on Nick from Trading Analytix. He'll be here in a little bit, and he'll probably talk about a lot of these Mag 7 companies. But take a look at this is Meta in an ascending wedge, and also, if you guys can't see it right away, that could be a harmonic butterfly pattern potential reversal candle developing, especially if we reverse from the top of this wedge. Other earnings, big one is going to be Tesla. You guys, obviously Tesla is in the crosshairs of the market right now because of its massive rally following the Trump election. So, what happens with Tesla moving forward is going to be pretty interesting. We also have IBM and Qualcomm on Tuesday as well. Now on Wednesday, because we were talking about Wednesday and everything that's happening, whether it's the Fed, whether the Bank of Canada, we also have earnings from we have the South African rate decision that is also happening on. Oh no, I'm sorry, that's Thursday. But on Thursday we have earnings from Amazon, Apple. Oh, have you guys seen Apple? Holy cow! Apple has just been under pressure. You can see this 200 DMA, how important this level is right here on Apple. Okay, so they have earnings on Thursday. Amazon has Apple earnings on Thursday. Visa, MasterCard, Caterpillar, Blackstone, Intel, a lot of different companies that day as well. Also, Mexican GDP. I just shared with you what's happening with the dollar Mex. So you have Mexican employment the day before. You have Mexican GDP afterwards. And then also on Thursday, we have advanced GDP and unemployment claims in the U.S., and we have the ECB meeting. So let's talk about, there's so much happening this next week. Let's go into the euro and what we're seeing here. So in the euro dollar, the euro has finally broken above some pretty key resistance today when we cleared the 104.60 level. So this level of resistance was broken. That's a big one. The next level of resistance we need to be watching for is 105.20. But actually, there are now levels that we need to start paying really close attention to. And what I'm going to do is, since we had a strong pivot off the 618 retracement, now we need to start looking at what a retracement like this looks like, and something that, if you're following along via Forex Analytics, you guys already know this, but what you'll also notice, and let's go over to the daily chart, is we've been following a channel, and we finally broke out of that channel this week. That was a pretty big development. So let me draw that channel for you here, since not everybody is a Forex Analytics subscriber. So you can see that channel was broken. There's the upper, that's the upper end of the channel. Here is the lower end of the channel. Looks something like this. Okay. And we've now broken above the trend line, channel resistance. We're now making higher highs. That's important to understand from a trend perspective, okay? That we're actually making higher highs now. So now you'd have to expect dips in the euro dollar should find support. Now the question is, how far can we retrace? We'll take a look at let's go over here, the 105.75 level. That is the 38% retracement of this entire drop. So that is where I would be expecting some pretty big resistance to come into play. Let me get rid of some of these green lines because I think they are going to be a little intrusive with what we're looking at. Okay. So this 38% retracement will come in right here. You can see, let me grab this. Right here, right? But also, if you just kind of scroll back a little bit and you see that there is this previous support or previous resistance right there, this whole area is going to offer pretty strong resistance zone for the euro on any continued rally. So watch the euro on any continued rally because I think that we're going to be facing some major resistance. And one of the reasons why I think that resistance is going to be fairly strong is because we need to find out what President Trump wants to do, what Trump wants to do really with the EU. He believes that the EU is ripping off the US and he wants to impose tariffs. So that means at some point the euro is going to find some resistance as Donald Trump says, hey, we're going to slap tariffs on this, that, luxury goods, whatever the case may be. And then the euro probably will come under pressure. My assumption is going to be somewhere near the 106 level. So as we approach 106, I think you have to have an open mind that we might see some two-way price action around there. Now, remember, we're trading around 105 right now, so it's not too terribly far away to reach for those levels. All right. So, now we were got to talk about the ECB. The ECB is on an easing path, and we expect that to continue to happen. Now, could the ECB and Christine Lagarde start to talk about inflationary pressures are more significant in Europe as well? I think that is a potential risk, and so how the European Union and the ECB, frames their policies moving forward, because everybody knows they're going to cut rates by 25 basis points, but how they frame it moving forward is going to be really, really important this next week. Okay, last thing that we're going to be looking at the end of the week, we're going to have German preliminary CPI, we have Canadian GDP, we have core PCE, which obviously is the Fed's preferred inflation gauge, which could move obviously the dollar as well. So keep all that stuff in mind as we go into the end of this next week. Also, there are earnings from a lot of energy companies. I think ExxonMobil and Chevron and so on and so forth. All right, guys. So at this point in time, I'm going to bring in Nick from Trading Analytix because I know he wants to cover some of the indices. But don't worry, I'm still going to cover the S&P. I'm going to cover gold. I'm going to cover crude, and I'm going to cover some other markets that I think are really important before we review what's happening or review the trade setups from last week, and I give you my top 3 trade setups from this week. So without further ado, here's Nick from Trading Analytix.
Hello there, everybody. Blake, thanks so much for having me on. What a week we just saw with equity screaming higher, but we do have to look out for Mag 7 earnings next week. So likely another busy week. Let's go ahead and dive into some of it. The S&P. So I've been in it long since around CPI, and I've taken some off the board. I think there's a little bit of room for caution. If my chart would just load, there we go. So here's what I'm seeing. I'm seeing a lot of gaps, and gaps do typically get filled. So in the event that we just popped up and kind of retrace, I'm looking somewhere between the 59.50 to the 6K level to kind of resume trend for the bulls. It would also be a back test of the breakout. So, some of these gaps, I don't think we're going to fill all three. We might fill one, we might fill two, but earnings, tariffs, those could be catalysts for a bit of a move lower. Certainly Apple, if it breaks lower on earnings, wow, would that mean something? So yeah, just just a little bit of room for caution here. But I will say, in the event that we continue to trek up higher, that I am targeting the 6,200 level, 6,190, 6,200, somewhere around there. And if in an ideal world, if I got, really lucky, I'd like to see a move up higher, back test of the breakout of 6,100, and then a resumption of trend. But like I said, a lot of gaps lower, earnings coming in. So I'm gearing up and positioning myself for a potential move back to as far as 59.50. NASDAQ, something similar as well. You can see we've had some gaps here, and I am kind of just looking for a potential gap fill and a back test of this trend line here around 21,250 or 21,420. Granted, we can simply continue higher, but those are kind of my levels in the event we pull back to try and look for them. Also, the NASDAQ is testing the underside of this resistance, former support. So we might stall up here. So just food for thought. Let's go ahead and talk about big tech because next week is going to be very important. You can see here as far as earnings go, I know this Alphabet one is wrong. I think that's actually coming out on February 4th. But Tesla, Microsoft, and Meta all come out on Wednesday. So key up Wednesday, huge day. And then just the next day, Apple and Amazon on Thursday. So a lot of Mag 7 earnings. You know how important the Mag 7 are. So let's definitely keep an eye out on that. But I will dive more into those big tech stocks in a video on Trading Analytics if you want to check that out. They'll likely come out this weekend or early next week ahead of the earnings. But I want to go ahead and talk about Facebook because I am seeing an interesting setup in Facebook. Or Meta, I should say. So Facebook did just break the upside of this trendline resistance. Originally, it looked like a false breakout, so maybe we want to draw it like so. But what I would say is, although it's breaking out, it looks great. We do have a 3 drive on RSI. So for those that are not familiar with 3 drives, it essentially means you have a high in price and a high in RSI, a second high in price, a lower reading in RSI, and then a third high in price and a third low in the RSI. So that's a 3 drive. That typically means that it's not the worst idea to take a short. Just food for thought going into earnings. I'll just put that out there. And then let's talk about Apple. Apple is so important. I think NVIDIA did just overthrow it as NVIDIA now being the largest stock, but Apple could be back there within a few sessions. But it's holding this low right here, and I think what I'd like to see is a pop up to the 38.2 around 235, and we have to watch that level in the event we get up there because what we could see is either a continuation, rip higher, V-shaped recovery, or what we could see is a rejection and a break, and that could be the canary in the coal mine. So take that how you will. I'm going to go ahead and pass it on back to Blake, and feel free to check us out on Twitter at Trading Analytics. Have a great weekend, everyone, and see you soon. Cheers.
Thanks, Nick, for your overview of the markets. We appreciate it, and we appreciate having you here each and every week. Matter of fact, if you guys appreciate what Nick from Trading Analytics does, make sure you jump down below, give him a thumbs up, tell him how much you appreciate him. And, if you want to talk with Nick, he's in the chat room often. I don't know if he was in here earlier today or later today. Let me see. Nick, you might see him pop up. Oh, there he is. There's Nick right here. So Nick is in our chat rooms every single day. So if you want to say hi to him, that's a good place to say hi to him as well. All right, moving right along. Now, I know Nick has talked a lot about equities and about the earnings that are upcoming, but I do want to talk about the S&P because S&P did intraday make a new all-time high. Now, you can see how we made a new all-time high. We're basically back testing that breakout point at 6105 or 6100. We're there right now. But take a look at what's happening with the spiders because the spiders are the ETF that a lot of traders trade, and a lot of them are going to look at this as being, well, yeah, I saw maybe a gap and possibly move higher, but that might end up being a false breakout. I'm not saying that you should be short equities just yet, but I think we're at a very, very key level. And especially if you look around, you look at some of the different markets like NASDAQ 100. If we do turn here, it's that in itself is a lower high. You guys can see that clearly, right? You look at the Dow, the Dow, that would clearly be a lower high. And then, you look at how some of these European markets have stretched as well. There's a bit of a risk, and obviously as we head into the weekend, I know it's Friday right now and the markets are still moving, but as we head in the weekend, you do have a president of the United States that could say things, and he could say things that could really, really move the market, going into next week, and we could see gaps come Monday. Based on some of the commentary that you might hear over the weekend. So those are things just to be thinking about as we move along. I do want to talk a little bit about gold, because gold is getting very, very close to all-time highs. You can see how we have broken out. And matter of fact, let me do this for you. We've broken out to all-time highs, and we hit the 127% extension. And if we continue higher, even though we might break new highs, you can see there's the previous highs. If we hit new highs, that would also be in our channel that we've been discussing, right? So whether you're talking about channel resistance coming into play, or whether you're talking about the 161% extension or the long-term 261% extension also coming into play, that is from the highs of 2020 to the lows of 2022, 261% extension. That all coincides right at those highs. And look at how divergent relative strength is. Very, very divergent. Matter of fact, I need to draw this out for you because I was paying attention to this and actually mentioned it to the Forex Analytics community earlier today. If you want to see where I did that, it would be on the gold chart that I posted earlier today about right there. You can see that relative strength that is divergent. Right? And I said gold is testing the RSI trend line, which is pretty divergent. All right. And which is true. I mean, we are testing that trend line. It is divergent from price. That's a risk if you're a gold bull, because even if we rally, let's just say we put on another 50 to 100 points in gold, the RSI on a daily basis is still going to be divergent. We could break that trend line, but it'll still end up being divergent, which is a risk. That means that new highs are probably going to get sold. All right. So anyway, just a little update on gold. And I do want to talk actually a little bit about crude, because we have discussed crude quite extensively here, and I want to talk about Bitcoin too. So don't go anywhere. We talked about Bitcoin and about how, this was a very big pivot level. And if we broke back below this trend line, we would come back to 73. So guess what? We are nearing $73. And you have the Trump administration that has they're looking to, in their terms, drill, baby, drill, right? That could continue to weigh on prices. What we do around $73, I think, is going to be really important, because this was a big, range breakout point. So I think somewhere down here, you're going to find buyers. So keep an eye on crude if we drop back towards $73 and we find some buyers down there. Last but not least, I do want to talk a little bit about Bitcoin, because Bitcoin is stalling at, now, if you guys are not aware of this, let me just draw it out for you. High to low, right? If we break out and we continue to break out here, the 114 level is the 261% extension. If that rally does occur, you can see in RSI, we would probably press higher, but it would end up being divergent as well. So if you guys are looking to scale out of some of your crypto, I think any move up to 115 might be a good place to maybe book some profits if we get up there. And the question is, are we going to get up there? But that's something that I'd be looking at. All right, this is the point in time that I actually want to talk about. Let me make sure I didn't forget anything. I want to review the three trade setups from last week. And then, look at the S&P is coming down. Oh boy, let's take a look. Oh, we are on channel support in the S&P, just intraday, just so you guys can see it. There we are. Channel support, that's pretty key. All right. Top three setup, or excuse me, three trade setup review from last week. Okay, it's Friday, guys. It's been a long week. It feels like it's been 3 weeks packed into 1 week with the Trump inauguration and all the volatility we've seen. I'm sure many of you can sympathize with how I feel right now. All right, number one, short US dollar Norwegian krona below 1120. Well, guess what? We broke 1120 today, and we are below 1120 right now. If you shorted it this morning and you could have made some money, we're still below it right now. So at this point in time, you're positive. Now, will the US dollar Norwegian krona break down further? I believe so. But this 1120 was a big level. And you know what? It's not just the 1120 level. It's more of the 1128. When we took out these levels here, that 1128 level, that was a false breakout. Now we are actually pressing lower. So I believe the US dollar Norwegian krona at this stage in the game is going to be coming down. We are closing below the 50 DMA more than likely today, and it should expose some further downside in the US dollar Norwegian krona. So first trade setup worked. Second one, short US dollar Canadian at 146. Well, obviously, as I explained to you guys earlier, we have not made it to the 161% extension. I was looking for a short up here at 146. That didn't happen. President Trump and a lot of headlines prevented that from happening this week. So trade number one worked. Trade number two setup just never transpired. Trade setup number three was short New Zealand dollar below 55.25. And guess what? We did not break 55.25. We did not come down there. And now that we've pivoted off of this level, I want to show you how important this support was. If you missed it from last week, that's a rising trend line. And as I mentioned to you last week, if we broke below it, it'd be very bearish. But given what's happened this week and the information we have now, the US dollar or the Kiwi, to me, looks like now we're going to recover. And you're going to have traders that are buying the Kiwi dollar with basically stops below 55 cents. I mean, it's trading at 57 cents. You think about a risk reward from this point of view. If you're a long-term big money hedge fund and you believe the dollar might come under assault from the Trump administration, think about your risk reward. You're buying it here, your risk is below here, and your reward might be around the 200 DMA, maybe up here, who knows, right? Well, you're risking $1 to make 2 or 3, or risking $1 to make 5 or 6. If you're a big money guy or gal and you're managing a lot of funds, right now, from a risk reward perspective, you look at longer term charts like this and you're like, well, and the RBA, or the RBNZ might not be dovish moving forward. Maybe inflationary pressures are going to stay persistent. Whatever your view is, this could be a long-term long that many hedge funds are probably keeping their eye on. Anyway, those are the three setups from last week. So one of them worked, two of them just didn't transpire. Okay, this is going to be the 3 trade setups for this week. First one, I want to buy the Aussie dollar on any dip now to 63 cents. Now, you guys, we're at 63.15. Some of you might say, oh, that's good enough. Right. I think while we're above 63 cents, you want to be on the long side of the Aussie. I think one of the biggest positions in the market right now, there's two. I saw a slideshow or a presentation or something this week. The most aggressive positions in the market, long Mag 7 was number one. Second one was long dollars. And the third one was short fixed income U.S. treasuries, right? Something along those lines. What I'm trying to say is the dollar has been aggressively bought. And if we are seeing a reversal manifest here, then the Aussie dollar, while it's above 63 cents, I want to be a buyer. All right. And speaking of number 2, trade setup number 2, One of the other positions that I would be strongly thinking about right now is the 10-year notes market. Now, remember, we talked about how important the break of this trend line was. You can see that low, that low, that low right there. So let me just draw it for you guys. That low right there. Now, what happens if we break back above there? Well, then we'd have an inverted head and shoulder pattern. So while we're above 108 in the 10-year notes, I would be looking for a reversal higher. So long 10-year notes. By the way, this next week, and I forgot to mention this, on Tuesday we have a 7-year note auction. And I believe on Wednesday we have another auction, somewhere like that. So we do have some fixed income auctions that are coming out. So watch the demand in those, because it could have an influence on what happens in the 10-year as well. All right, so that's trade setup number 2. While we are above 108 in the 10-year, I believe it's a decent risk reward to be on the long side. Trade setup number 3. Which one was it? Trade setup number 3. Oh, short euro sterling. Short euro sterling while we're below the 84.75 level. Now, if you guys want to know the setup here, well, if you take the high to low, we hit basically the 618 retracement at 84.70, 72, 75, somewhere around there. You can see this. This is resistance, right? So now we're back below the 200 DMA. So I'm going to look for any bounce to 84.40s to look for a short in the euro sterling. If you guys haven't been playing that, I actually closed out of my short today when we dropped below the 200 DMA. But in Forex Analytics and the patterns in play, you can see the euro sterling was put on by me earlier this week because we are at a 618 fib. I want to continue to trade against that. So if you're a Forex Analytics subscriber, you already know this trade setup. But looking for any bounce right now to sell into is what I'm looking to do. Now, for those of you that are not paying attention to this on Forex Analytics, make sure you check it out. And remember, it's only $1 for 10 days to try out Forex Analytics. So those are my top 3 setups for this week. And guys, if you agree with those setups, or maybe you have a setup that you're looking at, jump down in the comments below. Give me a thumbs up if you think these videos are great and helping you prepare for your next week. I'd appreciate it. And Nick would appreciate it, and so would our team that's making sure that you're getting this content delivered to your inbox or through YouTube or whatever social media you're looking at each and every week. So give them a thumbs up and tell them thank you as well. All right, guys and gals, my name is Blake Morrow with Forex Analytics. I'll be on the F.A.C.E show on Monday. Don't miss those free shows, the F.A.C.E show. And by the way, K-Man should be back from his trip on Monday, excuse me. So the Flow show, which is our other free show with Ryan Littlestone and K-Man, those guys should both be there on Monday. So they'll see you there. I'll see you on Monday's F.A.C.E show. You all have a great weekend. Thank you so much for tuning in. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.